Welcome to Trading Nation. I'm Mike Santoli. Investors gearing up for a huge week of tech earnings as many of the NASDAQ heavyweights report. Names like Amazon, Microsoft, Alphabet, and Intel all out next week. So what can investors expect? Bill Baruch is with Blue Line Futures, and Mark Tepper is with Strategic Wealth Partners. To talk a little bit about that, Mark, if you look at a lot of these big NASDAQ names, many of them have had serious pullbacks, maybe not even necessarily related to their earnings prospects. So where does that leave you in terms of looking for opportunities?
Yeah, I mean, next week is a big week. I mean, if there was a week that could actually turn this market around, it's definitely next week. So tech has really driven the market this year. It's up 11% this year versus the S&P, which is up about 5%. Amazon, Google, Microsoft, we like and own all of these. And one of the things that all three of these have in common is that they're huge players in cloud computing. And that space is going to continue to see accelerating growth over the next several years as more and more businesses begin to embrace the cloud. And we think cloud usage is actually going to double in the next few years because of that. So, and in order for these companies to provide these services, they're offering subscriptions, and there is no better revenue than recurring revenue. Now, Amazon's up about 50% this year. Microsoft is up about 30%. Google is only up about 5% this year, and I think it's a great buy right now. I mean, there's no better way for businesses to advertise online than through Google's AdWords. I mean, Facebook is not a threat. Their advertising platform was nowhere near as effective as Google's when they allowed demographics, and now that they don't anymore, it's going to be even less effective for advertisers. So Google is by far, in our opinion, the best way to play this right now.
All right, so Google, one of the laggards in FANG, along with Facebook this year. Bill, as you sift among the charts of a lot of these bellwethers, which ones stand out to you at this point?
Of this grouping, I think Microsoft is the most constructive. It's the only one holding above the 100-day moving average, and there's a nice constructive trend line going back to end of last year. I think it's priming to head higher. I mean, really, if you look at it, it feels like the FANG behemoths. Microsoft's sort of a dark horse, and I also like that. If their earnings are there, I think the technicals are there to allow Microsoft to outperform in the fourth quarter. Now, if you take a look at Intel, its best days are sort of behind it in the sense it's peaked mid-year, it's moved down, and you got the death cross that took place in September, and then now you have the 100-day moving average looking to push through the 200-day. So I would stay away from Intel, but I also want to get the pulse of the broader market. And the fact that the S&P is failing to get above 2,800 today, and the NASDAQ to the downside, I'm watching 7,100 in the futures. You know, if 7,100 in the NASDAQ futures goes out, you could have a couple more down days, and you have to watch out below. And you want to get that pulse of the market overall.
Yeah, it seems like the pressure has not fully let up, even with these rally attempts, guys. Bill and Mark, thank you very much for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.